hires an employee and the employee is going to make $1,500 a week. Well, we don't have to do anything because we didn't pay him yet. We simply hired him. So that's not an actual financial transaction, right? So we're not going to have to do anything. Next, we paid, or Bob paid, $5,000 to B Company for the equipment it purchased January 2nd. So now we've paid our bill, right? So what we're going to do is, first of all, we used cash, right? So we're going to have to credit our cash, and this is transaction 7. Where is it? Yeah, 7. So we're going to go ahead and credit our cash for the amount of that account payable, which was $5,000. And now we're going to decrease account payable, so we have to do that with a debit, right? Because to decrease a liability account, it's not an asset, expense, or owner's draw account, so it must be decreased with a debit. The next thing we're doing is we're purchasing supplies from Ace Company, $1,000 of supplies, and we're paying $800 in cash, and we're going to have $200 that we're going to pay later on account. So we purchased the supplies for $1,000, so we're going to go ahead and debit our supply account for the $1,000. And we're going to go ahead and credit, we paid $800 cash, so we're going to go ahead and credit cash. And the other $200 is on account. So we're going to go ahead and credit accounts payable, that $200. Now Bob owes the employee a salary of $3,000 and he pays the employee cash. So we're actually paying our employee now. So what we're going to do with that, we are going to go ahead and credit cash, right, because we're paying with cash. And what's going to increase is our salaries expense, right? So we're going to go ahead, so his expenses down here on the bottom, we're going to debit salaries expense for $3,000. Okay, the next thing we're doing is we're going to pay office rent of $2,000. So again, we have to credit cash, paying it with cash. We're going to have to debit rent expense for $2,000. Now Bob's going to withdraw $5,000 for personal use. Go ahead and credit cash, right? We're decreasing our cash. And drawings, remember, if you remember, our assets, our owner's draws, and our expenses are going to be increased with the debit, right? So we're going to go ahead and debit that for $5,000. The next thing that happens is there's a fee accepted, an advance fee of $10,000 from C Company for service that are going to be performed at a later date. Well, we did get $10,000, so we can go ahead and debit that. But we can't credit revenue, right? We have not actually earned that service yet. Until the point we earn the service, it is considered a liability to us. We've got money, but we haven't performed the service. So we're going to go ahead and credit unearned revenue for $10,000. Okay, at this point, you might want to put the tape on hold for a moment, and you want to add up, we don't have too many to add up, but you want to add up those accounts that have more than one item. We need to add and subtract and see what our balance is. So for here, for all of these, supplies, prepaid insurance, equipment, the balance is just that one transaction. So it's just one transaction. It's easy enough. These are our balances. And generally what you'd really do is you'd put a line under it and you'd have the amount and then put balance, but we don't have enough room. Accounts payable, if you look, we had a 5,000 debit, a 5,000 credit, a 200 credit. So right now we have a balance right here of a $200 credit. We need to add and subtract all the cash items, and again, you might want to put this on hold for a moment so you can add and subtract it, and then come back. But it will end up being a balance, a debit balance, of $14,000. Okay, make sure you've written all this down, because next we're going to go ahead and do the trial balance, and we're going to take the numbers right off of these T accounts in order to go ahead and do that trial balance. Okay, now we're going to do the trial balance. A part of the top might be cut off for you, but it's Bob Company trial balance, January 31st, 2012. In the solution, you've got a printed trial balance, so it's fine. You'll see it on the actual printed statement. But we're taking this right off of our T accounts. So we are starting with our cash, $14,000. Our accounts receivable, $20,000. Our supplies are $1,000. Prepaid insurance is $1,200. And our office equipment is $5,000. And those were all debited, right? Now, I'm going to go to notes payable, which hopefully that's in line, our $1,000. We have our accounts payable, which is $200. We have our unearned revenue, which is $10,000. And we have Bob Capital at $20,000. Now we have Bob Drawings. Those were $5,000. Revenue was $20,000. Rent expense, $2,000. And salaries expense, $3,000. I don't know if you'll see the bottom or not. It might be cut off. But as I said, it's fine because it is on the solution I sent you. So if you're going to add up the debits and credits, and you will see they equal, they are $51,200. And if you notice, we put a double line underneath them. There is information in the study guide about dollar signs. Go ahead and read those. We don't use them in the journal or ledger, just the trial balance and financial statements. But hopefully this is going to help you understand the chapter a little more and hopefully make the homework problems clearer. But if you do have any questions, please feel free to contact me. Have a good week. Hi, although we went through everything and I did give a verbal explanation, I know there were some accounts you could not see, they got cut off. So I just wanted to make this brief presentation just showing all the different T accounts, just so you can see what went on during our transactions during the practice.